The world's largest asset manager, Blackrock, just lost $1.5 trillion. Today I want to talk about how the current market crash is impacting these major banks and these major institutions and why it will cause a wider collapse. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, this article says that BlackRock's AUM, or their assets under management, fell by 11% in the worst start to the year in half a century. Larry Fink, the CEO, said the first half of 2022 brought an investment environment not seen in decades. BlackRock's AUM fell to $8.5 trillion in the second quarter of the year after topping $10 trillion at the end of 2021. Now what this shows right off the bat is even these major funds like BlackRock aren't immune to the current market crash. We have seen a number of hedge funds blowing up recently over the last 6 months, being liquidated and their entire fund being wiped out. Now you may say, Tom, this is only small, reckless hedge funds going bankrupt after making stupid investments. But in fact, even the largest asset managers and the largest banks aren't immune, and they are losing trillions. Their overall fund did see net inflows from new investors over $70 billion, but yet the overall fund is down $1.5 trillion when accounting for the giant losses. And it's not just BlackRock that's experiencing these same problems. Goldman Sachs profits have just fallen by 47%. The Bank of America profits have also fallen by 32%, and JP Morgan has suspended stock buybacks, and therefore Gold Telegraph says that banks are starting to feel the pinch as well. And as Jan Jack says, JP Morgan's profits fell by 28% from last year. BlackRock is down by 30%. Bank of America down 32%. Goldman Sachs lost $660 million trading stocks last quarter, and Morgan Stanley's revenue fell by 55%. As Jan Jack says, high leverage and risky bets is sending the banks into extinction. And this is exactly why I think that one, if not multiple banks, will end up collapsing during the coming financial crisis and the coming recession that is basically here already. The US won't officially be in a recession until the Q2 GDP figures are announced, but considering we saw shrinkage in Q1 and we're likely to see shrinkage in Q2, that means we're already in a recession. On top of that, Bank of America is expecting the next 4 straight quarters of negative GDP growth, and therefore they're starting to think this could actually be a long, drawn-out recession lasting over another year. Zero Hedge also tweeted these screenshots of Goldman Sachs results over the last year, stating this is becoming a problem. In Q3 of 2021, Goldman Sachs lost $820 million. In the fourth quarter, they lost $500 million. In the first quarter of 2022, down $620 million, and the second quarter down $660 million. But what I find most interesting is during this entire period of their public stocks losing hundreds and hundreds of millions of dollars, their privates seem to be increasing in value. In the third quarter, their privates increased by $1.7 billion, in the fourth quarter, $1.9 billion, in the first quarter of 2022, $255 million, and the second quarter, $440 million. Now, their private investments are going to be investments in unlisted tech stocks, unlisted crypto startups, and many other obviously unlisted stocks. But yet, hang on, Tom, haven't we seen these unlisted tech stocks and these unlisted crypto startups falling by over 90% in some instances and not increasing by $1.7 or $1.9 billion? And yes, that is absolutely the case. We have seen giant losses in these private markets, but yet Goldman Sachs just aren't recognizing these new valuations. Goldman is saying their privates are continuing to increase in value when yet their privates are likely down 80 if not 90% in total. When Goldman starts to recognize the true value of these private investments, they'll likely be taking losses in the billions. I find it funny how Goldman Sachs are even stating that Q2 net revenues were significantly lower year over year as macroeconomic concerns and the prolonged war in Ukraine continued. They're showing a $660 million loss in their public investments, but yet still showing millions of profits in their privates, which is obviously just being covered up and faked. Now, on top of that, Bloomberg has just announced that Apple plans to slow hiring and spending for some divisions next year to ease the impact of the economic downturn. And guys, if you haven't already, be sure to sign up to Moomoo right now using the link in the description below. You can currently get 10 free stocks worth up to $25,000 and a guaranteed free share of Lucid on top of that. Moomoo is very easy to use, it's incredibly customizable, they've got tons of technical indicators and advanced charting tools. On top of that, from Moomoo's latest customer agreement, they officially state they do not benefit from your order flow and they do not sell your order flow to market makers like Citadel or to clearing houses like Apex Clearing. In fact, they clear their trades on their own through their clearing broker Futu Incorporated, which does also not sell your order flow, and therefore Moomoo is brilliant for buying those AMC shares. And I think all of this cumulatively is just showing that it's not just these small risky hedge funds and it's not just these small startup tech companies and startup crypto companies that are feeling the pinch, but it's actually even the biggest institutions, the biggest banks and the biggest tech stocks. With these major tech companies slowing hiring and cutting their expenditure, these major banks losing 30, 40 or even 50%, and even Blackrock losing over $1 trillion, it just goes to show that even the biggest of institutions aren't immune and are suffering massively. And this is exactly why I foresee a lot more liquidations in not just these small hedge funds, but also in these large hedge funds as well, and even some of the biggest institutions and the biggest major banks collapsing as well. No longer can we say that it's just small crypto startups and obvious Ponzi schemes that are collapsing and cutting hiring, because in fact we're seeing even some of the biggest companies like Apple slowing their hiring process and cutting expenditure. And on top of that, Unusual Whales tweeted saying the Winklevoss's twins cryptocurrency firm Gemini is firing people to cut expenses per Cointelegraph. Now you may know that Gemini is actually one of the largest and one of the longest running crypto exchanges that is also firing people and cutting headcount to reduce their expenditure. It's not just these dodgy funds and obvious Ponzi schemes like Three Arrows Capital and Celsius that are collapsing and reducing headcount. In fact, it's some of the largest cryptocurrency exchanges like Gemini and like Coinbase that are cutting staff, firing employees and removing influencer promotion programs. When platforms like Coinbase, BlockFi and Gemini are removing these influencer promotion programs, you know they're struggling for cash because they can't afford their monthly marketing expenditure. And now on top of that, it seems tons and tons of employees are jumping ship from Credit Suisse, even without their severance pay upon departure. This article says that Credit Suisse has found a way of cutting jobs without paying severance. The article starts by saying it's happening. Credit Suisse is cutting its credit trading team. The IFR claims today that Credit Suisse is cutting headcount in its credit trading business by 25%. Now again, Credit Suisse isn't a risky crypto startup cutting its headcount. Instead, Credit Suisse is one of the largest major banks and one of the largest institutions cutting headcount by 25%. Now, Credit Suisse has twice cut severance pay in its existence, once in 2008 and once in March of 2020, obviously when the world was edging into a recession and edging into a pandemic. Considering that Credit Suisse is once again cutting severance pay, it does not show a good outlook for the current economy. And it says here that headcount has already been dramatically reduced by voluntary exits, which cost the bank nothing. Clearly, tons of employees at Credit Suisse are jumping ship, trying to get out before the firm goes under. And it says insiders say Credit Suisse probably has around 50 credit traders globally, but the US has been hit by a huge wave of resignations. It said all of the good people in the US have left, and 70% of them have already gone. I imagine many of these credit traders have been embroiled in illegal activity that's obviously under investigation, and that's why so many of them are jumping ship before people end up in jail. And finally, Mac10 tweeted saying what most people don't know is the Nasdaq actually lost most of its value after the Fed started cutting rates back in the year 2000. And he said today's gamblers can't wait for rate cuts and every pundit is tripping over themselves predicting when they will come. But considering the Nasdaq didn't lose most of its value until after these rate cuts, considering these rates are still increasing, it's likely we haven't yet seen the full extent of the current market crash. We can see here the Fed actually started cutting rates at the very end of the year 2000, if not at the very start of 2001. But at that point, the Nasdaq was still fairly high and was only down 5 or 10%. We can see the Fed started cutting rates at the very end of the year 2000, if not at the start of 2001. But actually by this point, the Nasdaq had only fallen by 30% and continued to fall down to negative 80%. Therefore, the majority of this drop, this 50% portion of the drop, actually happened after the Fed started cutting rates, not while the Fed was increasing them. And this is why I think the current market crash and the current recession still has a long time to go, and we're kind of just in this no man's land period, where at the moment, the S&P 500 is up 2% in one day, and then down 3% the next. But as I've said, I do expect this market crash to continue over the next few weeks, especially during the next FOMC meeting when the rates are increased once again. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.